Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So the first trading week of the new year is coming to an end. Overall price action was relatively quiet, so you can see market mostly stand inside the same range, the same channel that was starting to form in the last year in December and has started, and since then market stands in this tight range. It reminds the flag by the shape or just upward channel. So in general, we have to say a couple of things here concerning this situation. So first of all, the breakout of this channel to the downside doesn't mean immediately the crash of the bullish context. So why we recently talk a lot about this possible breakout and the levels that we need to consider, just because the breakout out of the flag, out of this channel, tells you that only one thing, that retracement could come deeper, but it doesn't mean that it breaks the bullish context that stands on the euro currency currently. So to do this, market has to drop significantly, but currently the drop out of the channel means that we could drop to the 121 first, and around 120 it could retest the broken top, but it will not become the destruction of the bullish context. It will be just a retracement. And when we said about the short-term bullish context that it might be broken if market will drop below 122 area, it relates only to the very short-term context and the following tendency inside the channel. This context will be broken, but not the daily bullish context will be broken. The crash of the intraday bullish context will mean just that market could reach deeper daily support areas. Only this thing. Because that could be some misunderstanding of the things that we discussed. And you might think that I'm talking about the turning overall context into bearish. It's absolutely not the issue. So, I mean, that could be on the daily chart just deeper retracement. But for intraday chart, for the hourly chart, for example, that indeed will be the destruction of the bullish context. So the one thing that we need to clarify here. So on the daily chart today, we have only one new thing. This is bearish grabbers right on top. So if you plot the MACD predictor indicator, you'll see that there's two grabbers side by side. Well, this is not the grabbers that I prefer to trade. Usually I do not trade this type of grabbers because they stand against the major tendency. I trade grabbers that supports the tendency. So for example, if market shows retracement, creates the grabber, that is good, stronger type of the grabber that I usually take into consideration. With these grabbers, I'm not intending to trade it, but we can't ignore it. Sometimes they work, and currently this pattern suggests the taking out of the lows, which particular means that its tendency could be broken. So this is not good really patterns for bullish context, for current bullish situation, but this is weaker type of the grabbers, and they very often fails. For example, last time we also have got the same grabber, same type of grabber here, and even the sell-off was strong. That's actually was the reason why we also were considering the possible deeper retracement. But you can see it easily has been erased and ignored by the market right from the beginning of the year, and has been destroyed this context very fast. So the same thing could happen here, but the grabbers have appeared, and we need to pay attention to them. On the intraday charts, guys, retracement that we have discussed really has been completed, or at least it has reached the first predefined level that we talked about. This is A, B, C top, OP target here. This is on an hourly chart. This is confidence support. This is also trend line support. So, and this is the first point where we consider today where a market will turn up or not. But here stands significant risk for position taken blindly right at the support and we need more confidence, more confirmation of the possible starting of the upward action. Particularly speaking, we need to get here some bullish pattern before consider taking in long position, because take a look, overall sell-off was relatively strong here with some acceleration, and that doesn't exclude the chance that market could drop slightly more to the next support area on the hourly chart. That's why to make a decision on position taking, we need more confidence, more confirmation from the market that indeed it intends to show this pullback. What particularly we will be looking for today. Here, guys, by the way, you can see really compound bearish divergence starting right from here once the channel has started to form and lasting till this moment. So trends stand bearish here, so on the 4 time frame chart not too much to consider. On the hourly chart, market has some support around the level that we have specified, 2265. That's for the first destination point. Is agreement and confidence support. So if you remember, here is also 618 support from this low to this top. I just pulled them out and for today just to keep charts clear. You can see the price action. But here is also the confidence. And currently overall price action looks a bit choppy and doesn't show any significant signs of the possible reversal. So it looks more like some kind of, I don't know, you could draw here kind of the flag pattern. So you could suggest that's maybe might think that its downside continuation should follow to the XOP next target. It's 2213. So there will be the level that we will consider. And what's importance of these levels is that it stands very close to the lows on the 4 time frame chart, to these lows. Because dropping below these lows, in this case, market will form bearish reversal swing, and in this case, we will have to turn back to the daily and see for the next support levels already on the daily chart. So, as we said, short-term bearish, short-term bullish context here will be broken in this case if market will collapse below these lows and break out of this consolidation. So that's why here is very important level. Here is important level that we have to consider. At the same time, what we could keep an eye on hourly chart and around this consolidation. I think that we could drop to the 15-minute chart, for example. Take a look what we have here. Here you could recognize the butterfly actually. That was the butterfly, guys. This downside action. So where is extension? So 127 extension, 127 butterfly has been formed, and here you could keep an eye on possible, I don't know, maybe hand and shoulders or something of that sort. That could give you the hint whether it makes sense to take a position or not. So, for instance, if market will show action back up to this top or slightly lower maybe, but once market will start to form here a hand shoulders pattern, you should easily recognize it. And after that, you could keep an eye on the area around 2250, where the bottom of the right arm should stand. That will be the point that could tell you whether it makes sense to take position or not. Market have to hold about this area. If it will start dropping back to the lows, it with a high degree means that we are going lower to the next support 2230. So other words speaking, keep an eye on possible bullish reversal patterns here. So currently we do not have any, but potentially it could be hand shoulders pattern, for example. That's the thing that you could consider. Maybe here could be formed regardless triple to buy if market will drop, starting to form butterfly another butterfly here, and with 1618 extension. So it could be first drive, second drive, and third drive. Potentially we have the bullish divergence here already in place, as on the 15-minute chart, as on the hourly chart, so we could recognize it. So that's the, in general, example of the thoughts that you could follow if you considering taking the long position on the market. So just drop your time frame, watch for patterns. If you do not have any patterns, do not take the position, because in this case, market really could drop further to the next support. On the next support, you need to do the same. Once market hits the support, take a look at the previous action here. For example, it's rather strong. That's why we think that this high probability exists that market still could drop to the 2213. Then watch for the patterns. Once pattern will be formed, you could try to follow it. But with this significant sell-off, if I'll take a look at the hourly chart here, it's not a good idea to buy blindly just because market hits the strong support area. So it's not the case that we should follow currently. We could do this if market shows the gradual retracement. But with this sell-off, it's better to get additional insurance and watch for patterns. So that's what we have currently in the euro currency. Let's keep watching and see from what level market could reestablish the upward action.